Which is the better AI stock to buy today, Snowflake or C3AI? I'm going to answer that question in this video, so stay tuned and let's begin.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, according to Statista, the AI market size is expected to rise from $242 billion in 2023 to almost $740 billion in 2030. That would be a compound annual growth rate of 17%. Meanwhile, according to Next Move Strategy Consulting, the market is expected to grow from 200 billion up to 1.85 trillion by 2030. So depending on the forecast you choose, regardless, the AI market, the market for artificial intelligence products and services, is approaching $1 trillion to $2 trillion annually. It's a massive market opportunity, and you can understand why companies worldwide are investing aggressively to capture a share of this market. Snowflake and C3AI are aiming to capture a share of that market in their own way. C3AI, of course, offering its AI intelligence service that helps enterprises make better decisions. Snowflake, meanwhile, is powering artificial intelligence with data storage, data analysis, everything to do with data. Snowflake is trying to penetrate that market. And of course, the underpinning of artificial intelligence is data. Snowflake is in a great position to benefit from that trend. Already, Snowflake's revenue has exploded from a little less than 400 million in July of 2020 all the way up to 2.44 billion in trailing 12-month revenue. Compare that with C3AI, who has yet to see its revenue grow meaningfully, 273 million in trailing 12-month revenue in the most recent update. C3AI has just implemented a new product, a new service to the market. It's in the test phases right now. It's employing it with companies, proving to companies the capabilities, and hopefully after it proves its capabilities, C3AI can generate sales and revenue meaningfully from this new AI product. That remains to be seen, however. The next thing I wanted to compare these two companies on is average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. And with that being said, let's look at Snowflake, which has increased its shares outstanding from 290 million up to 327 million in the most recent update, or roughly 10% shareholder dilution, while C3AI has gone from around 90 million shares outstanding to 115 million shares outstanding, or shareholder dilution of about 20%. So C3AI is diluting shareholders more than Snowflake. The next metric to look at, and one where Snowflake really differentiates itself from C3AI, is the cash flow from operations in the trailing 12 month. You can see Snowflake doing an excellent job boosting cash flow from operations up to 679 million in the trailing 12 months. compared to negative 73 million for C3.ai. This means Snowflake no longer needs to go back to investors and ask for money and ask for investment. It's self-sustaining. It can sustain itself. It can fund itself with the strong cash flow from operations. One of the more important things I look at when I'm considering an investment is the company's total long-term assets and how it relates to its cash flow, its profit, and its revenue. What I like to see is a company generate strong revenue, cash flow, and profit from a smaller asset base or an asset base that's not growing too much. I don't see that here with either Snowflake or C3.ai. They're both increasing their long-term assets. Snowflake growing from around 400 million in long-term assets all the way up to 3.1 billion in long-term assets. Meanwhile, C3.ai really just growing but 194 million in total long-term assets. Snowflake has about 15 times the total long-term assets of C3.ai, but also Snowflake is generating significantly better cash flow from operations and revenue compared to C3.ai. So it's generating a proportional increase in revenue and cash flow from operations compared to its total long-term asset. It's just a bigger company. So the next thing I wanted to look at is total employees, and I'm looking at the same thing here. I want to see a company generate more revenue, more profit, more cash flow from a fewer base of employees. That shows me that they're getting good productivity from their employees. And Snowflake has grown its employee count from around 2,000 all the way up to 6,000, almost tripling its employee count. That is a bit concerning, and that is one reason why I've hesitated with Snowflake stock. You might have been following my channel, and I have rarely recommended Snowflake stock as a buy. In fact, coming into this video, I don't have Snowflake stock rated as a buy. I have it rated as a hold. And one of the reasons is because of the vastly growing expense base that's making it harder for Snowflake to generate profitability on the bottom line. C3.ai has not increased its employee count as much as Snowflake, but this has to do a little bit with its relationship with Baker Hughes, a strong investor, a bigger company that is also an investor in C3.ai. They kind of share a sales force where Baker Hughes uses its sales force to sell C3.ai products and services, and C3.ai shares the commission with Baker Hughes. So in that way, C3.ai generates revenue without needing to employ a sales force. So it kind of mitigates the impact of the total employee count. Still, C3.ai does have meaningfully lower employees than Snowflake, which suggests that the company could increase revenue if it were to add a sales force maybe, or maybe improve its engineering team. That remains to be seen, but at least it has 1/6 the employees of Snowflake. I mentioned earlier profitability is a concern, and look at Snowflake's operating income over the trailing 12 months going in the wrong direction and fast. 1 billion negative in operating income in the trailing 12 months. It's not getting better. Same thing with C3.ai, although it's not going down as fast as Snowflake with negative 291 million. You might say, well, how is Snowflake generating such strong cash flow without generating so much, without making profit on the bottom line? And it's due to some non-cash expense. One non-cash expense is stock-based compensation. Another is depreciation and amortization. And so Snowflake has a large portion of its costs in non-cash expense. That allows it to generate positive cash flow from operations while still being in such a negative operating income category. Finally, I wanted to compare these two on valuation, and the metric I chose to use is the forward price to sales ratio. And these two are expensive, even in this metric. Snowflake is trading at a forward price to sales of 15.76, C3.ai trading at a forward price to sales of 9.483. The losses on the bottom line and the expensive valuations have been the main reasons why I haven't recommended Snowflake or C3.ai stocks as buys. But if I had to pick between one of these two AI stocks and pick which one is the better AI stock right now, I would pick Snowflake. Snowflake would be my choice for the better AI stock to buy now. I hope you enjoyed this video. It's important not to underestimate the value provided in these free financial analysis videos. To keep the content free, I need your support. All it takes is a smash of that subscribe button to tell YouTube that you want to keep this channel alive. So hit that subscribe button, and thank you for your support.